Good morning, traders. Good morning, traders. I want to buy the Dow Jones index at 18530. That's the orange line here. This is a limit order. So this is not a market order. This is a limit order at 18530. That limit order will be filled if the price starts changing direction where it is now and start going up and reaches the level of 18530, that limit order will be filled. All right. So when that order is filled, I will use a 30 pip stop loss, 30 stop loss when the order is filled. So all I'm doing now, I'm just waiting for the price to start changing direction and to come back down. But if it continues to go down, I am not in this trade at all, okay? So why do I want to buy at 18530? The title of this video is Live Day Trading using a Fibonacci extension. The Fibonacci extension that I'm using here is the 138.2% Fibonacci extension level, the most powerful Fibonacci extension key level. All right. So as you can see, I'm on a 3-minute time frame. I don't want to go back again and repeat myself 100 times. All I will do at this point in time is to refer traders to the video that I titled Quick Scalping Dow Jones Index on the 3-minute chart. Quick Scalping Dow Jones Index on a 3-minute chart at 24 Stock Trader YouTube channel. Digit 2, Digit 4 Stock Trader YouTube channel. All right. So you may know what was my trading setup, why I want to buy here. All right. So using Fibonacci extension, you can see that the price went down yesterday from this point down to this point here. All right. So that's yesterday. This is the significant low that was achieved yesterday. All right. So for trader that has been following us at Day Pro Traders YouTube channel, we understand that if a financial instrument is going down and exhibits a significant low, if the price breaks below that significant low, the next challenge for the bearish momentum is the 138.2% Fibonacci extension level. So I'm going to call out my 138.2%, 138.2% Fibonacci extension level. Here it is. Just adjusting my line carefully here. On the dotted line, here it is. This is the 138.2% Fibonacci extension level. Okay, if you accept that, that's the pink line on my chart now. So as you can see, the price did below that 138.2% Fibonacci extension level, which is at 18519, 18519. That's the 138.2% Fibonacci extension level below that significant low on the 3-minute time frame. Now I need to remind you, trader, that I'm not just coming to the 3-minute time frame, start trading using a single time frame. That's why I'm referring you to the first video that I mentioned before, that I had a trading setup that was in place. We were giving priority to bullish signal above 18615, and priority bullish signal above 18615, and priority bearish signal below 18615. Now we have this significant low. For that bearish momentum to continue, it is important that the price find a resistance below the 138.2% Fibonacci extension level. However, if you return back above, after you see now it's below the pink line, which is the 138.2% level, if it goes back above, it start going up, it is a little bit bullish, though it is a contra trend. So what I'm doing here to buy Dow Jones below the 18615, the green line here, is a contra trend, okay? But if the price starts changing direction and goes back above the 138.2% Fibonacci extension level, it is an indication to me that the bearish momentum that was pushing the price down to this significant low, that breaks below that significant low, is not as strong that we were expecting it. If the price return back below, above, okay, the price rises above the 138.2% level, it's below it now. Therefore, I am anticipating that there is a high chance that the Dow Jones may change direction and goes back above that 138.2% Fibonacci extension level. And if that is happening, my order at 18530 will be filled. This is a live recording, okay? On the 17th of August, 2016, the time in London is 45 minutes past 2 p.m. In New York, that's 9:45 a.m. All right. So live recording, okay, live trading using Fibonacci extension. All right. So I explained to you what I'm trying to do, why I want to buy. Now I'm waiting for the price to change direction and to come back up here and to fill my order at my limit order, not a market order, my limit order at 18530. We will see. If it rises up and reach the level, the 138.2% level, a final resistance start going down, then we know that the bearish momentum is strong, and we can look for an opportunity to sell below the 138.2% Fibonacci extension level. We will see. All right. So I'm not yet in the trend. If they continue to go down, that has nothing to do with me. If it start going up, it become more interesting to me, then I will buy. But if it find a resistance below the 138.2% level, well, I will change my intention to buy the Dow Jones into selling it. I am ready to buy and I'm ready to sell, but at a specific price level. What I will do now, because I've been talking to you now for how long? For 7 minutes, okay? Let's pause the video with your permission, and we will come back if the price start going up to my, okay, price, okay, my limit order at 18530, okay? The price now at 18502. What I'm going to do, because the price went a little bit too far away from the short-term from the 138.2% level, I'm going to change my limit order. I'm going to bring it a little bit down, okay? I'll bring it down at 18525, okay? So I'm changing my limit order because the price went down a little bit too far. So I'm readjusting my limit order, okay? I don't want to enter 18530. I want to bring it down to 18525, 18525, okay? Boom, that's it, it's there. Okay, so let's pause the video for the first time after 8 minutes recording, and before we pause the video for the first time, I will place my mandatory vertical line, which I color always in turquoise when I'm live recording, and we will see whether it's going to come back here and fill my order, and most importantly, that I may get paid. All right, and we don't want to be kicked out of this trade. All right. Okay, let's pause it now, and I'll come back to you very shortly. So, pausing the video at 14:48 London time. That's 9:48 a.m. Eastern time. Here we are. You can see 9:47 here. Vertical line. Pausing the video for the first time. Speak to you soon. Okay, traders. So far, the first 30-minute candlestick bar is not yet closed. So, what we usually say to traders, it makes sense to wait until the first 30-minute candle is closed before one can day trade. All right, you see that the price going down is trying to retest the support level in the zone of 18486. This support here, this one here. I'm now on the 30-minute time frame, and you can see that this first 30-minute candle is stretching itself to retest that support zone in the zone of 18486. All right, this is the support level that the price is heading to right now. All right, with that information, I'm going to go back to my 3-minute time frame, and I have my limit order already at 18525, You see this candle here, the last candle here was stretching to retest that level of 184.86. I want to place another limit order to buy again, all right, right here at 185.11. 1 second, please, traders. So this is my second limit order that is not yet filled. Okay, so I'm going to color it also into orange. So this is my second limit order to buy the Dow Jones Index at 185.11. My intention is that I want this candlestick bar, this one that is developing now, because it's not yet closed. I want it, normally it's now closed, okay? We want it to go up to this candlestick bar here. That will be a good one, but it's top like this. But by the way, I leave my second limit order here at 185.11. So I have two limit orders that are now in place, but not yet filled. So they will be filled when the price reaches those limits, okay? So I move my vertical line here. I will pause the video one more time. The time in London is 58 minutes past 2. In 2 minutes time frame, in 2 minute time, the first 30-minute candlestick bar will be closed on the 30-minute chart. Okay, so let's pause the video for a second time, and I will come back to it if the price start going up here. Okay, I don't know how long this will take, but we will see whether it's going to come back up or not. Okay. What I'm trying to do, I'm trying to catch the bounce up because the price was going down for some time. I'm trying to catch the rally, okay, the rally in a downtrend. It's a contra trend. It's a little bit risky, but okay, we're expecting it to go back up a bit, okay? So pausing the video for the second time after, okay, call it 12 minutes recording, okay? Speak to you soon. Hello traders, we pause the video right here where I place my vertical line. As you can see, the first 30-minute candle brought the price to the support level at 184.86, right? And now it start going up, and hopefully our first limit order, okay, in fact this is our second limit order at 185.11 will be filled, and then the first one at 185.25 will be filled. So I'm happy with what's going on so far. If we go to the 30-minute time frame, you see this is the first 30-minute candle. You can see how it dropped it down to that support level that I was showing here. This support level here, this one. And so the first 30-minute candle brought the price down exactly at 184.86. Now it's trying to go back up. Okay, that's what we want. So first 30-minute candle is closed. All right, we can highlight the median line of the first 30-minute candle and give priority to bullish signal above it and priority to bearish signal below it. All right, so far so good. Let's go back to the 3-minute time frame. It's heading towards okay, our limit order here at 185.11. Okay, will it be filled? Okay, we will see. Okay. So this is what has been going on, okay, so far, so good. All right. So I'll wait a bit and see whether this order will be filled right now and right here, okay. So waiting for the first limit order, okay. All right. So one more time, with your permission, let's pause the video because it's taking a bit of time, and we will see whether it's filled or not. And then I will set my stop loss and also my profit targets. All right. So speak to you soon. The time in London is now 33 minutes past 3 p.m. In New York, 33 minutes past 10 a.m. Pausing the video for the third time after 14 minutes recording. Speak to you soon. Let's continue, traders. We pause the video here. Where I place the vertical line, you can see that the price went up, and but it couldn't fill the first order at 185.11. Okay, so it's taking a bit too long to fill those two orders. So what I'm going to do, I'm going to now, okay, leave it as it is, and I'm not going to sit down waiting for it to fill those orders. However, what I will do, I will set my stop loss for each trade carefully. So my first trade is at 18525. I will set my stop loss 25 pips below. I was thinking to use 30 pips, but because it's taking so long, I will set my profit target at 18500. 25 pips stop loss for my first limit order, which is not yet filled. All right, so that's my first stop loss. What's going on? That's it. Here it is, 18500. This is for the trade that will be filled at 18525. For the second trade, I will use 16 pips. So my stop loss for that 16 pip will be at 18495. So this will be my stop loss here. I will change that. Okay, I'll change it. Otherwise, you cannot see it. Okay. $16 pips. Now I'll put it at 18493. Okay, 18493. That's 18 pips. 18 pips for my second trade. 18493. That's my second stop loss right here for this trade that I took here at 18511. Stop loss at 18493. Using 18 pips for the first trade, I will use 25 pips. But remember that I'm not yet in the trade. I'm still waiting for the price to fill those orders. Hopefully it will be filled. Otherwise, we can't say more. All right. And for the profit target for this one here, 18511, I will expect 30 pips out of that trade, bringing me to 18541. $18541. That's for the 30 pips for my trade at 18511. So the profit target will be at 18541, expecting 30 pips out of that trade. Color in turquoise, that's my target for this trade here. And for this one that I enter 18525, hold on please. 2555. Yes, I will expect also 30 pips. $18555. Expecting 30 pip out of that trade also, and I will set my color it also in turquoise. So if you understand what I'm doing here, so we have two limit order waiting to be pending to be filled. The first one at 18519, okay, and I will use for that trade 18 pips. Stop loss at 18493. For the second limit order at 18525, I will use 25 pips. Stop loss at 18500. All right. For the trade that we want to enter at 18511, target 30 pips at 18541. Second trade at 18525. Profit target 30 pips also up at 18555. If the price fill those orders and the price continue to go up as it reaches this level, the first limit order will be closed, and if it reaches this level, the second limit order will be closed profitably. Okay, so now you know exactly what I'm expecting. The price does not have to fulfill my expectation, but if you fill those orders and I start going down, then okay, that will be a losing trend. I'm going to pause the video one more time, but what I'm going to do, I'll wait until London, New York is closed, and I'll come back and update you guys so you know exactly where we are. And the time of the day is now 19 minutes past 4 p.m. in London. All right. So in exactly 40 minutes or so, London will be closed, but New York will stay open. Okay, until 9 p.m. London time. Okay. So here it is. So I'm just going to leave it now, and I'm going to walk away from it, and I will come back and update you guys when the market is closed. All right. So pausing the video for the 4th time, and we'll come back and update you guys and tell you whether those orders has been filled or not. I'm on a 3-minute time frame, whether we get paid or whether we have been kicked out of the trade. All right. So speak to you at the end of the market. Pausing the video for the 4th time. Okay, traders, let's continue. We pause the video right here, as you can see, where I place my turquoise vertical line, and we had 2 orders that were open. The first order is at 18511, second order 18525, and we were waiting for those orders to be filled. So I set my orders and my stop loss. Okay, the stop loss, you can see them here, and the price continued to go down. You can see here, and then suddenly start going up. You can see this tall candle here. Fill the first order here. You see here. We are on a 5. I'm on now. Let's switch to the 3-minute time frame so you can see clearly here. So on a 3-minute time frame, you can see that this candle fill that order at 18511, and then following by the next tall candle, fill it at 18525. So I was in this trade. Here it is, okay, and then price just going up. You can see here after those orders were filled, you can see very fast. So orders were filled here, okay, and then the price pulled back a bit without even coming near our stop loss, only to rush up to hit our target. First target 30 pip, 18541. Second target at 18555, and then it stays up like this. You see it, a lot of traders took profit here, like us, in the same zone, and the price pulled back, okay, and the rest is history. So you can see here the price closed up. Now I need to clarify a few things with traders, because the purpose of the video is educational video to show traders how to day trade, how to scalp trade like a pro. I'm going to go now. I want to show you a few things. Going back into the 30-minute time frame where I was telling you what we were expecting. So this is today's session. So you can see that the price pulled back today near the low of this support here. That's what I was telling you, and continue to go down. Okay, but the point we were trying to tell traders is that on the 3-minute time frame, hopefully we can see it again now. Yes, there was this significant low here, and then we apply Fibonacci extension to this price move from here down to this level here, and we were highlighting the 138.2% Fibonacci extension level. Okay, that's the pink line on my chart here. Okay, so this is a market stable data that if a financial instrument is going down, all right, and break below the last low, all right, which is this one here, the challenge for the bearish momentum is the 138.2% Fibonacci extension level, which is the pink line here. Now you can see that the price breaks below the 138.2% Fibonacci extension level, the pink line. You can see D below it here. But in order to confirm that the bearish momentum is still intact, the price must stay below that 138.2% level. It's just a market stable data, a market principle. But now, if it goes back above that 138.2% level, is telling us that the bearish momentum is diminishing. The opposite is also true in an uptrend. If you want to understand what I'm talking about here, go to dayprotrader.com and click on 138.2% Fibonacci extension level. As you can see here, normally when I start trading first, I place my order above, okay, the 138.2% level at 18525 to buy. But as you can see, the price continue to go down, forcing me to place another order, which is the second order that I place here at 18511, because the price continue to go down. My expectation that it will go back up. No, I have that certainty that I have that expectation, not certainty, that expectation that the price will go back up. Why? Because if we go, you see that people were selling the Dow Jones, so it went down and went below this low here. All right, so people are waiting to sell again. People want to sell again, but if they want to sell again, the price must rally up. Okay, it must rally up again. So that rally up is a counter trend, and I want to take advantage of that because the price went down. You can see here, okay, and then it went up a bit, and then it came down. So we can say that from this point onward, we have 1, 2, 3 minimum price move is 3. So there is a high chance that the price will go back up a bit. But because a lot of people were selling, this is what I was saying to traders, that do not sell when the price is going down. It's better for it to rally up. So people continue to sell it down, pushing it down without a rally. But the rally should take place. But now what I'm saying, it doesn't mean that tomorrow definitely the Dow Jones will continue to go down. But the point I want to clarify to you that if the market is bearish and people want to sell, okay, the price must rally up a bit, okay? So I want to highlight another. You can see we have if you put this trend line on my chart, this one here, corrected this point, and this one here, we have this bearish trend line, the price break above it. But look carefully. If we connect this high here, this one here, are you following me? If we connect this high, whoops, I'm moving some line. If I connect this high to this one here, all right, we have a bearish trend line. So I'm on a 10-minute time frame now. So remember that on the 10-minute time frame, we had this bearish trend line. All right, so it's a bearish trend line. So if the price will become truly bullish, it must go back up above that 18615, that key level. That's why I say to traders, priority to bullish signal above 18615 and priority to bearish signal below 18615. So you may be wondering, John, why did you buy it? This is a counter trend, a risky trade. After a down move, we were expecting a rally up, and I want to take advantage of it. So for both trade, I had 30 pip and 30 pip, that's 60 pip. Okay, carefully, just using limit orders. Okay, and I was not sitting to watch the chart. The order were filled, the stop, the profit target were hit, a profit was taken. All right. I hope you have found this video also useful and will put into use, okay, to make excellent trading decision. All right, because I did not want to sit down and show you go through. You can see we entered the trade, okay, quite early as soon as New York was open. And if you want to wait, you have to wait until all this at the end of the market, and it's going to be a long video. All right. If you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. So remember, priority to bullish signal above 18615 and priority to bearish signal below 18615. You want to sell at resistance level on the edge. Pay attention to the price structure. All right. Minimum price move is 3, 1, 2, 3. All right. Price D below the significant low. We want to highlight the 138.2% Fibonacci extension level. For that bearish momentum to continue, The price must find a resistance below the 138.2% level. But if it goes back above it, it's indicating to us that the bearish momentum is weakening. Therefore, we can look for an opportunity to buy. Okay. We are the TSTW24 traders talking about live day trading using Fibonacci extension like a pro. Happy trading to you all, and speak to you soon.